Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because although it's hard to believe, we are only 2 weeks into this Bitcoin expansion phase and they usually last for a few months. Now it's crazy to think we've only been in price discovery for 2 weeks. It feels like we've spent 2 months in price discovery with all of the emotions we've seen on YouTube and Twitter. You guys know that I believe the short cycle scenario is most likely because this cycle has been ahead of schedule over and over again, whether that was making an all-time high before the halving or this run-up we're seeing after the election. It does feel like the ETFs and the election outcome have pulled forward a ton of demand. But the mistake I see so many investors making is they have to be all in on one scenario and they want to sell their entire holdings here and try to buy back in lower, or they want to try and do the 4-cycle scenario timing and sell everything in Q4 of 2025. Or if they're worried about macro, they want to sell their entire portfolio here for cash and hope to buy back in a lot lower because of some type of major recession crash. And all of those paths tend to be very stressful and very hard to manage emotionally and usually result in a ton of mistakes. So for me, I like to have a base case that's most likely. I like to have a possible scenario that I'm still watching out for. And I like to keep the unlikely scenarios on the chart as well, just to remind me that it isn't impossible for something like that to occur, even if I think it's unlikely, and I manage my portfolio accordingly. And when it comes to what Bitcoin will likely do next, we have to expect it to grind higher here based on current price structure. Pullbacks are always possible, especially in this market, but the chances of a huge shakeout imminently or the cycle being over aren't that likely in my opinion, but it's still something we'll watch out for going forward. But grind higher or a pullback are still by far the most likely scenarios in my opinion, and I don't think we can see anything on this chart yet that tells us the cycle is over. We'll be looking out for those major warning signs that perhaps the cycle could be ending by seeing a major fake out to the upside or a breakdown of a previous range, but right now this is still a clear high momentum breakout above the previous all-time high, and it can be quite dangerous to try and jump in front of this type of momentum and open a huge short position or sell everything for cash to try to buy back lower. Now we know a lot of this momentum has been driven by the Trump trade, and we saw huge inflows going into the spot ETFs, and we're seeing some small outflows over the past few days, which is really just some light profit taking. Nothing major to worry about quite yet in my opinion, but we'll continue to watch those ETFs closely. And it looks like we're getting more and more signs that the ETF options are going to be coming quite soon, which will make it easier for investors to hedge their holdings instead of having to sell the ETFs to lock in profit. And so far, Bitcoin's price action in Q4 has been in line with our expectations and similar to what we've seen in Q4 during previous halving years and post-halving years. And as long as November continues to carry on with this momentum, we have to expect it to carry over into December. And it seems like we have a lot of reasons to be optimistic over the next month or two. Now, of course, there's always signs of concern as well. We are seeing a lot of excitement and greed piling into this market. We've been in extreme greed over the past few days. I like looking at the CoinMarketCap Crypto Fear and Greed Index because it has this really clean chart. But if we take a look at the more commonly used original Fear and Greed Index, we see that we're at a 90 reading, something that is very, very rare. And that's actually where we topped back in March. So, and then we can remain in extreme greed for a while. This doesn't mean sell everything and run for the hills, but it does mean that if you are overexposed or if you are sitting on massive gains, it doesn't hurt to take some profits. And that's what I'm likely going to be doing this week. And I'll show you exactly what I will be doing. But usually when we get to extreme greed like this, a pullback or some type of consolidation is incredibly likely when we see this many people piling into the market. We are also still sitting on massive levels of open interest, just asking to be wiped out by some major volatility. Now, a lot of this open interest is both longs and shorts, so we could see those liquidations in both directions. But usually when we see open interest this high, we see market makers start to swing the market around to try and liquidate a lot of these positions. We've been seeing hundreds of $1 million of liquidations for both longs and shorts over the past few days, and Bitcoin hasn't even been moving much. I mean, it's been moving within a 5% range, and we're already seeing huge liquidations. So what happens if we see a 15% move or a 20% pullback? What's going to happen to those liquidations then? So that's something that I'm watching very closely going forward. We're also in a region where profit taking makes a lot of sense. Before this election result and before this narrative of the Bitcoin strategic reserve, I did consider anything above 90K very expensive, at least in 2024. We'll make an adjusted version of this for 2025. But for me personally, after accumulating at much lower prices, I am not interested in buying Bitcoin above 70,000 or above 90,000, and I want to lock in at least some gains above 90,000 because I'll be kicking myself if I didn't take any profits when Bitcoin had a 9 handle in 2024. And there is some confluence for Bitcoin to have a cool off if we look at the dollar index officially entering its risk off zone. This 106.50 region has been very pivotal for Bitcoin historically. Bitcoin bottomed when we originally fell below that level in November of 2022. Bitcoin took off into that spot ETF rally when the dollar index got rejected at that level in October of 2023. And here we are once again facing it in November of 2024. So if we do see the dollar index grind higher here, it would make sense for Bitcoin to consolidate at the very least, if not have a small correction because of that dollar index risk off region. And this strength in the dollar index is driven by what we're seeing from the Federal Reserve. Powell made some comments this week that they're in no hurry to lower interest rates. We did see traditional markets like the S&P 500 react to this. The S&P 500 actually had a red week, and it was surprising that Bitcoin was able to ignore that correction in the S&P 500. But if the S&P 500 continues correcting into next week because of this dollar index strength, it wouldn't surprise me if Bitcoin did the same. The market is not liking the fact that we're pricing in higher for longer, and there's only 3 25 basis point rate cuts priced in over the next 12 months. Keeping rates that high for that long likely puts a bit of downward pressure on risk assets and puts upward pressure on the US dollar index until these estimates change. And that brings us to global liquidity, the main macro driver for Bitcoin, in my opinion. It's been going down over the past few weeks because of that dollar index strength, and Bitcoin has been able to ignore it because of the election narrative and the strategic Bitcoin reserve narrative, the same way it was able to ignore falling liquidity in late 2023 and early 2024 because of the spot ETF launch and the spot ETF demand. But we really want to see global liquidity turning higher here if Bitcoin is going to carry its momentum over the next few months and see a much higher rally, because those prolonged drops in the US dollar index are what have been required for those Bitcoin mania phases. We haven't seen that quite yet. I expect the dollar index to roll over by January, and perhaps that's when we see alt season as well. Now, this doesn't mean altcoins can't get dragged higher by Bitcoin. It just means we don't expect major outperformance by altcoins until the dollar index rolls over and we see global liquidity going higher like 2021 and like 2017. And so far, we haven't seen that. And it's likely going to require more interest rate cuts than what's currently priced in, or the Fed restarting quantitative easing, something we still haven't seen quite yet. We also still have Tether dominance sitting on this trend line, something that has historically called for a correction or consolidation in Bitcoin. Again, we can stay above this trend line by the supply of Tether increasing, which it has been over the past few weeks. So just something else we'll be monitoring. Whenever this trend line eventually breaks, we likely see a major rally in Bitcoin and altcoins. But if we do end up seeing another bounce here before that rally occurs, we could perhaps see a correction and more consolidation in this asset class. But as of right now, we just have to wait and see what ends up happening. So for me, this makes portfolio planning very easy. I know we're early in an expansion phase and I'm expecting higher prices, especially based on our current momentum. But because of some of the warning signs out there, like the extreme greed or what's happening with the S&P 500 or what's happening with global liquidity, I'm going to be taking some small profits from my Bitcoin, Ethereum, and Solana holdings. Nothing too crazy, maybe 2% from each of them, and put that in cash. So I still have plenty of upside and I'll still benefit greatly if this expansion phase just continues grinding higher. But if we do see a possible correction here, like we have laid out in our probabilities, if we do see that decent sized pullback, I'll be happy that I took some profits at current price levels with Bitcoin above 90K, Ethereum above 3K, and Solana above 200. And I really think you can't go wrong taking some profits after the year we've had. I mean, Solana is up over 100% year to date. Bitcoin is up over 100% year to date. Ethereum has been trading like absolute garbage and has barely outperformed the Nasdaq and S&P 500. And we're really seeing a huge divergence in these charts. I mean, we see Ethereum with a big rejection at its mid-level and it looks like it wants to trade lower, or best case scenario, trade sideways. We have Solana hinting at price discovery with a clean weekly close above its March high, and it looks like it wants to expand higher, kind of like Bitcoin did. And we have a lot to look forward to with Solana. The likelihood of a Solana ETF in 2025 is quite high. And if staking yields for Ethereum and Solana start being given to those ETF holders, that could really spark some demand for those products, because I don't think many people will buy the ETF if they can't get the staking rewards. And when it comes to Bitcoin itself, sometimes it really is that simple. We've been bullish ever since we got the close above the previous all-time high, and there's really no reason to panic or try to sell everything so you can buy it back lower. My preferred strategy is to slowly trim winnings along the way and pay myself for all of the patience over the past few years, but also leaving a lot of my positions running for more potential upside, and will perhaps lock in some more profits once we see some major warning signs like falling back below the previous all-time highs, or we just get another huge weekly candle of another $10,000 or something like that. But as of right now, momentum looks good. Paying yourself along the way is my preferred strategy, but to each their own. And as we look forward, we're still seeing huge deficits being run by the federal government, and we're still seeing the trend continue of larger and larger deficits each year, even though we haven't entered a recession yet in the economy. And as long as we're seeing this crazy debt issuance, we expect it to get monetized and increase the money supply eventually, like we've seen over the past few decades, which means that I remain bullish on risk assets on larger time frames like the S&P 500 and like Bitcoin. Of course, there will be bear markets along the way. There will be corrections and consolidations along the way, which is why I like to avoid leverage and I try to have a portfolio that makes emotion management quite easy. But we'll continue to see what happens. 2 weeks into the expansion phase so far, and it's been awesome. Let's see if it continues like it has historically for the next few months, and let's see what version of the cycle we end up getting. But as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.